The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the December 26th. Fantastic Friday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who knows for a fact we should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a very Merry Christmas. Thanks so much for joining us this morning. I am grateful for your presence here, and of course, I am here to serve you. That means all you've got to do is give me a call at 877-927-6648 internationally. You can reach out to us at 727-445-1044. Again, I hope everyone had a great holiday. I think they ought to make today a holiday as well. You know, why should the markets be open? But they are. They're open all day long, so we've got a full day of programming for you out here. And let's get right to the markets. Right now, the biggest thing in the market, well, if we take a look at the futures, just got to run through where we're at. Futures-wise, Dow futures up about 36 points. They're trading out at 18,024. We'll go take a look at that. The S&P is up 4 points at 2,082. Nasdaq's up 14. Russell's up just slightly this morning. King dollar up 7 pennies. Not a big deal out there. So the currency market is relatively quiet. The hard currency market, not so quiet. The gold is up $22. She's trading at $11.95. Silver's up 50 cents right now. That's up 3% this morning. That's trading out at $16.20. Light sweet crude is up 44 pennies. Not a big deal out there. Natural gas is basically flat at the moment. It was trading lower earlier this morning. Markets over in Europe, they're closed today. In Asia last night, you had the Nikkei was open. Let me see here. What did the Nikkei do? Not much, I don't believe. Up 10 points, so that's not much. Was the Nikkei open? Yeah, it was open. So up 10 points. No big deal out there. Hang Seng was closed. The Shanghai was up 89 points. That was up about 3% out here. Expect, for those of you that are joining us, thanks so much for doing that. Many people are getting ready, I suppose, to hit the stores, take back things, exchange things, maybe watch some good college football for the rest of the weekend. That's a good thing to do out there. But again, thanks so much for joining us. The market should be relatively quiet today. So let's go take a look at what's not quiet, try to get a feel for what's going on. Then let's take a look at, again, long-term charts, longer term, where it is that we are likely headed to. So let's get that in. Let's start off by taking a look at Goldilocks, up $22. So what is it that gold is actually doing out here? Now, I know there's a lot of people that have gotten their skirts in a tizzy or something like that. I don't even know where that comes from. It's trading up $23.60. Does it have any meaning really right now as we speak at the moment? Well, let's look at it like this. Let's look at it like this so I can give you a big enough chart here. Here's the actual weekly contract for gold. What you can see here with regard to gold, where we open the week and where we are trading right now is basically the same, 1196. So gold, since Sunday's open, has done virtually nothing. So don't get, it's gone from a high of, let's say, I can't say nothing, but it's gone from a high of 1203.60 down to a low of 1170.70. Is this the big bounce? Is this the big turnaround? I don't know the answer to that. But what we do know is we've got some indications, we've got some tools that we can use that can help answer that. What are some of those tools? Well, if you're watching us on TigerTV in full HD, and I hope that you are out there, what you're looking at is two trend lines. I've got one that is dusted. Let me do this here. I'm going to go ahead and modify this chart here by just simply closing a few things down. So let's do that. And that way we can always add. Oh, let's leave that one on. Let's turn that off. Let me turn the volume off. Let me turn that off as well. Okay. So in essence here, well, let's just do this. Let's. What's your trend line? There we go. Okay, so let's take a look at this white trend line out here. So in essence, we have a clean palette. We've got a weekly chart. Look, we're closing the week out today, so we might as well take a look at it. And remember, when you're trading out there, if you're trading on a short-term time frame, 30-minute, 120-minute, 10-minute, I don't care what it is. Make sure that you're always looking up a level, down a level, just to kind of get a feel, not kind of, but just to get a feel for what's really going on inside the marketplace. If you were trading based on a daily time frame chart out here, you need to take a look at, hey, what's going on from a weekly perspective. You've just simply got to do that. So from a weekly perspective, and this kind of puts things in and gives us a pretty good, because when you woke up this morning, or whenever it was, you turned on to this show, you turned on to some other show, and you saw that gold was up $23, the immediate thought would be, my goodness, gold is breaking out. Wouldn't it? Maybe it is. But if it's really breaking out, and if we really take a look at it, and we really say all gold's doing is just trading to where it opens Sunday night, all we've seen is, on a roller coaster, a couple of little small rides out there. What we do know about Goldilocks is this, and this is the trend line from a weekly standpoint. It's the current contract out here. So this is the February contract for gold. And if we just simply take a look at a swing high from July of 2014, and in essence, right now, I'm just going to use as the trend line here, the top of that December 8th swing out there, the top of that level, which is out at 1239. Unless gold breaks above that area, and it's got a ways to go. So gold could, if it were to do it today, just an example, what would that price point be? About 1228. At 1228, it's going to run right into a level of resistance. You're at 1197 right now. Is it going to get to 1228 today? I don't know. Probably not. Is it likely to close right around here? Probably. Will it? I really don't know. But what I do know is gold hasn't broken out. Now, maybe it's broken out from the low here of November 3rd. It will really have broken out if it can close above that white trend line. That would be one of the first tests out there. Now, there's another trend line. There's a shorter-term trend line, and I'm going to switch back and forth here. So we'll switch over to the daily just so we can get a pretty decent feel. You see, there's a secondary trend that I've also put up here. That secondary trend, I'm just simply coming off this swing point here from August, the week that began August 11, 2014. And that trend line here that I'm using, just running that into the October 20th high out there. So as we take a look at gold this morning, and gold really did try to break out of that trend. It tried to do that week that began December 8th. And then it failed, got back inside there. As I take a look at gold right now, it's an absolute failure. Still a failure, even being up $24. That, if we take a look at trend lines, what I mean by a failure, at a trend line, it has failed. Now, let me go ahead and put up the signal box, our TAS market profile signal box. What's the bullish? What's the bearish side? So here's the weekly chart. Now, here's the cool thing with regard to gold. For the week, the low was 1170.70. The actual bottom of the box, and what I mean by the bottom of the box, it's a level of support, it's natural area of support out here, 1169.30. So that support level has held, but it has got nowhere up near the resistance on its weekly level, which is 1203.60. Remember I said today, if gold could break above, today the number is right around 1229. Well, shoot, let's just go ahead and use our TAS profile. In order for gold to have any potentiality, not even a word. I don't think it's a word. Maybe it is a word. And if it is, then I use it. And if it's not, I just created it. The 1219 would be the number that you need to at least see gold close above. I would say what you really need to do is see gold close above the that white trend line. So you see, and take a look at a weekly chart out here, a totally different picture than if we just simply took a look at the daily chart. Because on the daily chart, you see the candles out here, and you're like, well, but it doesn't really help you to identify where the week began inside of gold. So now we know. Now we know what it's doing, and we can sit there and look. What else do we know about gold? It has been making higher lows, no question about it. That first low, November the 7th, the second low out here on December the 1st, and a third low here on December 22nd, has been making higher highs along the way out there, so that's good. If we take a look at just, how about one other tool, we just look at retracement levels, retracement off of the last swing point low to the last swing point high out here. What we know is gold has gotten down, it's made more than the 0.618 retracement level, because it got below that area. So at this stage here, I think it looks pretty. It's nice to be able to have something to talk about here. First thing off the bat because of the move, so I will thank gold for doing that. Let's go take a look at silver. But is it really broken out? The answer is absolutely, positively not. Just is. At least that's Stevie's call. And you may have a different call, and that's cool. That's why we have bulls and we have bears. Now, if we take a look at the silver, a little bit different picture here. So is silver the one that's really giving us some kind of meaning? If we go back and we take a look at its trend line out here, the one that I'm beginning back on July the 11th, 2014, and then my next touch point is out here on August 28th. You can see that the trend line, in fact, I'll do the same thing. Let me turn off a couple of tools. It just makes it a little bit easier. There's the trend line that we're taking a look at. We know about silver as it broke above it, came back, tested it, got back inside, but didn't really get back inside and hold for a long time. Of course, it's just really moved sideways from a price standpoint. So in that case here, let me just switch over to the weekly time frame, right? Let's get a feel for what has silver done on a weekly time frame. What you're going to see is, in essence, almost the same thing that we're looking at inside of gold. So if we take a look at silver, it opened at 16.15. You're trading right now at 16.19. Has it done a whole heck of a lot for this week? And the answer is no. It really hasn't. Has it broken through this trend? It has. It's come back. It's tested it. So that's about the most positive sign that we can see. However, what I would say is it really needs to break and close above this candle session that began December 1st. So silver, in order to break out, in my opinion, needs to close above $16.81 out there. And then what you'd be looking at, if you look at just simply retracements from that high back in July down to the low that was put in here a few weeks ago, what you can see is that silver's made a 0.382 retracement. That's all it's done at this stage. But if it can break above that high out here from that I'm using from December 1st, right around the 1681 level, of course, what it really needs to do is close above the week that began December 8th out here, and that's at 1735. So if it closes above 1735, then what you can look at is a move up to 1874, 1875. That is your 0.618 retracement level. But otherwise, not doing a whole lot of things. In fact, probably the most bearish thing is that gold is up and silver is up today, and it's going to be on light volume. And so what does that mean? That means that you could more likely be setting up an A to B equals CD to the downside than you could an actual breakout session. We've got to see how it closes today, but as we look at it, it just helps to put things in perspective. In fact, let's go keep that same perspective going, actually. Let's go take a look at the futures market. Let's go take a look at the Dow futures. Let's do that. So here we take a look at the Dow. What we know about the Dow is it's trading above its high from December the 5th out here. The Dow futures could very easily be headed up to the 19,142 level. That's an A to B equals CD to the upside out here. But let's just put this on a weekly chart. I'm just curious. Let's put this on a weekly chart out here. Let's get a feel for what the Dow futures have done here for the week. And because I've got the current contract, not going to have much in the way of data. Now, that looks better. That looks like a breakout. That's way better than when we took a look at gold or what silver is doing. So from a weekly standpoint, you do have the Dow futures that are confirming or suggesting to us that they want to make that at least that 1-to-1 A to B equals C to the upside. I would say if they can't, because we're going to start running into some turbulence out here. And, and I'm telling you, you don't have to fasten your seatbelt right now, but it is ahead of us. It will be here next, that turbulence could really start come next Friday, so a week from today. What we ought to see at a minimum in the case of the Dow futures between now and Wednesday, we ought to see the Dow futures get up to about 18,162. Doesn't have to do it on a straight shot. You're at 18,027. So it's about another 140 points to the upside that I expect we'll see inside of the Dow, at least the Dow futures. This is Steve Rhodes. This is TFNN. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we took a look at gold, we took a look at silver, we took a look at the daily chart on the Dow futures to get a feel for where things ought to head to or could head to into the end of the year, so through next Wednesday out there. If we take a look at natural gas, I get a number of texts, emails here, I guess, from folks looking at natural gas, everybody trying to find the bottom out here. Now, I've got the March contract for natural gas up on my screen. That's what we're going to take a look at right now. And if we take, what I can tell you, we can look at a couple of different patterns out here. So let's look at from this high back on June 16th out here. Let's take a look at just simply a simple A to B equals CD pattern. You might say, hey, what is that? It's really referred to, we like to affectionately refer to it as the lightning bolt pattern. And the markets, they just simply will make these moves. Now, there's a tremendous amount of information that you can garner when you really learn how to use this tool out here. Now, I teach folks. I've got a 7-week workshop that is going on. The first archive workshop was done November 22nd, and I covered in a 3-hour period of time. So if you're looking to really, you're the type of person that wants to learn how to do this on your own so that you can use it for yourself, maybe pass it on to your kids, family, friends. I can tell you that this is one pattern that you absolutely want to learn. And what you want to do is you want to learn the nuances. And that's really what I teach in that 3 hours, and really teach you how to use it and to trade with it. So you can still sign up for that. So if you've got some gift cards, things of that sort, go ahead and or if you've got some things that you just absolutely don't need, go refund those. Go cash those in. Come on over to the homepage at TFNN.com. It's not too late to sign up for that course. I'm going to be doing the next 3-hour workshop for that. Is going to be on January the 9th. So, in another couple of weeks out here. And you've got access to me individually to help you out with the patterns that we're looking at on individual stocks, currency pairs, whatever it is that you might trade out there. They work on all different time frames. So come on over to homepage of TFNN.com. What we know right now about the March contract for natural gas, there's several A to B. There's at least 2 A to B equals CD down patterns. I'm just giving you the larger one right here that shows that prices made it to the 1 to 1.272 level. That's at $3.05. You're trading at $3.05 now. Now, that's a target. Does that mean that this is a daily chart, by the way, that we're looking at, that light sweet crude, that natural gas has found a bottom? No, not at all. That's a price target, and you need to really learn the nuances on how to actually utilize and trade this pattern. In fact, I would tell you, looking at this tells me right now that we could see natural gas get down to about 265. So until I see some type of reversal signal, it's just simply at its current level. Now, that level that can change. We can get some big cold snap. Maybe that has some impact on it. But I can tell you that seasonally, natural gas is back into following the seasonal pattern, which is that it makes a high right around that first week in December out here. And the actual most recent high that we've got actually took place November 21st. If I look at that first week in December, bottom line is, in that first week of December, after that point in time, natural gas tends to sell off out there. Now, there's a secondary A to B equals CD pattern. That's really beginning at our C point, making that our A, our B point right here being the December 8th low, and your C point being the high here on December 15th. The 1-to-1 there says that you ought to see prices spike down to about the 293 level inside of the March contract. So at this stage here, if your question is there a bottom that is put in, I can't come up with a bottom even if I go to a 30-minute chart. I don't believe. Let me take a look at it, see if there's any kind of pattern out here that shows up that I can visually see. And the answer is no. So now, does that mean that the bottom tick on this March contract that took place here at about between 7 and 7:30 this morning, down at $3.01 out there, that could be the low? Well, most certainly. What I can't do. How about that? I also can't speak very well. What I can't do is tell you the bottom tick or control the markets, or necessarily tell you the top tick. What we can do is we can identify levels of where price should go to, and then watch for the bulls and the bears to show up. And they don't hide. They paint signs for us all the time. That's really the second element of the workshop, is really understanding which of the 30-plus Japanese candlesticks that you really must know, and how to judge their strength and so forth. So come on over, homepage at TFNN.com. Over on the left-hand side, you'll see what we call our little carousel. There's an up and down arrow. You can click on that. You can click on the 7-week trading course, and I'd love to see you participate there. Light sweet crude right now, she's up 20 cents, trading out at 56.04. We know about light sweet crude here. This is the 30-minute chart for light sweet crude. What is this showing us? This showing us is, it looks like it's not showing me a whole lot. I think more important with regard to light sweet crude, well, I can't do it on this. This is this contract here. I'd actually have to go ahead and do it on the continuous contract. But the continuous contract basically says right around $50 or so. This is Steve Rhodes. This is TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick or tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got 36 points. C's trading out at 18,066. S&P is up 5.5, trading at 2,087. Composite up 14. Russell 2,000 up 5 points, trading out at 12.11. Gold up $21. Silver up 44 pennies. Leading the charge to the upside, we got Juno Therapeutics. JUNO is the ticker symbol, up a nice 8% this morning. GoPro GPRO up 4.5%, up about $3. ISIS Pharmaceuticals up $2. You've got the gold shares. Those are Virgin America, VA. That's up $1.71. Celgene up $1.60. Gilead Sciences up $1 out here to the downside. Let's see. You've got the KLX Inc. off about 81 cents. Other than the daily gold miners, the inverse of the bearish side is to the downside. You've got the Let's see. You got United States Natural Gas, UNG, and UGAS. Okay, those are to the downside. Yeah, makes sense. eBay trading up just slightly. Not much dollar-wise, really, in anything to the downside here. But let's go surfing around and see what we've got. Let's take a look at Juno Therapeutics. Let me see. Is there any news out here? I don't show any news. This is a new okay, so this is a new IPO. So there's got basically no information for us on that. That began trading on December the 19th. So we won't spend much time. There's no way for me to give you any kind of price projection. I've got no historical data to work with. Let's take a look at GoPro. A little different story out there. We look at GoPro. It's up about 3% here this morning. GoPro had confirmed made an A to B equals CD to the downside. So here's your beautiful A to B equals CD to the downside. If you wanted to get in on GoPro after this had a nice IPO, right? Take a look at this. This is what you like to see. Goes from the opening low on June 26th. The low out there was $28.65. Makes a run from $28.65 to $98.47. Looks like GoPro's the new sexy Tesla out here, right? Then it goes ahead and it makes an A to B equals CD to the downside. The first A to B equals CD to the downside. Now, pretty good chance that we're going to see a retracement level, Fibonacci retracement level from the low, from the IPO low, all the way to the high out here. Yeah, how about that? A 0.618 retracement level. Let me do this. Let me just spend a moment here. I don't know. Oops, didn't mean to do that. Let me spend a moment here. Let me come back. I'm going to make it a little bit easier for you to visually see this. What am I going to change? I'm going to change the A to B equals CD tool. This will take me just a moment as we go ahead. I thought I had already done this. In fact, I'm sure, but I was having some difficulty with my system. I'm just changing them to yellow colors out here. Just makes it a little bit easier to blend that in with the retracement levels. That way, so I'm going to just change the swing line color out here, just making those yellow. And then let me go ahead and change the actual label colors on this to yellow as well. There we go. So there's our A to B equals CD pattern. We can see that, the 8 point out here inside of GoPro. That was the high on October the 7th. That was out at 98.47. Makes a move down to form a B point out here on October the 30th. Got down to a price point of 64.14. Makes a retracement, 0.618. It actually was a little bit higher than that, a 68% retracement. And then the one-to-one price projection. So ahead of time, the market does 75% of the work for us. Ahead of time, the market project, the A to B equals CD tool, the lightning bolt pattern, says that GoPro ought to get down to about $53.17. Now, the actual low that we've seen inside of a GoPro here recently was 53.64. versus 53.17. Not too shabby, right? Remember, we use this as a guideline out here. Now, if we just take a look at its IPO opening, down at the price point of $28.65 and run that up all the way into its high of $98.47, our 0.618 retracement level is $55.32. So we know between $53.17 and $55.32 could have been identified a Gartley buy, and most certainly it did. Nice bullish candle here on December 22nd, some follow through to the upside. So now what do we know? Well, let's go take a look at one of the outcomes, one of the several outcomes. There's 5 of them on any type of a Gartley buy. And let's go now from that swing point high down to the low that was put in back here on December 22nd. So the first target here for GoPro, the natural target is $70.77. Should you get in on it now? The answer, I would say, is probably not. 77 or 68.85 could be a decent chance that folks will go ahead and get off of the elevator at that stage, and then what you'd like to do is maybe buy the next retracement. Could things continue and motor on higher? They absolutely can. If you see GoPro with volume move above the 77 level, then the next target area is 81.34. But from a volume standpoint, let me see here. Let me go back and turn that tool on. Give me a moment to take a look at the volume out here. So volume-wise, nothing really of anything of significance out here. It's got decent volume up at the high. It looks to me like what GoPro wants to do. Let's put this on a weekly chart, right? Made a big deal of taking a look at the weekly charts here for gold, for silver, and let's do the same thing here with regard to GoPro. So now this is not too shabby at all. So let's do this here. Let me get rid of the retracement levels here. In the case of GoPro, let's say you were in it or you're looking to get in it. If we just take a look at just that same kind of trend line tool out here, I would have to, now there's your trend line. Can I create a price channel of any significance? If if I were to do that, and this here in the price channel, we would use the body of the candle. Yeah, so there's the body of our candle here from the top side. Probably. Let me see. We're not going to have much in the way of co-located opens or closes here. But if we take a look at the actual channel lines, we're probably somewhere right around. Come on, there we go. Somewhere really right around this level is the price channel. So in the case of a GoPro, it could easily find resistance out here. So if that Gartley buy is truly going to work and maybe even turn into the next A to B equals CD to the upside, what you'll want to see is GoPro close above this descending price channel. And that's what it looks like. We just drew it on the weekly. If I'll switch back over to the daily chart out here. And on the daily chart, so, we've got those numbers for us to take a look at. Now, the interesting thing here is let me turn off the A to B equals CD. Let me turn off of the trend line out here. Now let's go back and let's put the retracement ruler from high to low out here. And we're going to find right at the top of that price channel happens to be the 0.382 retracement. So there should be some fairly significant resistance at about 71.10. If we can take that out, that would be giving you a potential very large bullish signal inside of GoPro. So sorry to spend a lot of time there, but a lot of great things inside that chart, especially with the A to B equals CD to the downside. If we take a look at Virgin America VA, I think this is an IPO too. I don't recall. Recent. Yeah, it is. So not a ton of information out here for us to really. Oh, come on. What did I do? Oh, there we go. Key in off of. Let me see if I do this. So good back there. Okay, great. So not a lot to key in off of there. Let's take a look at. It would be nice if some other things would jump up on the screen. Let's go take a look at this KLX Inc. Another IPO. So, but now this is the kind of IPO that you don't really want to have anything to do with, right? The actual made a high December 3rd. It opened at $47, makes a high of $50 even Steven, and is trading right now at $40 out here. So nothing very good looking about this KLX Inc. Don't know what they do, but I can tell you the stock chart here doesn't look good. You know what let's do? Let's go take a look at the currency market, even though there's not a ton going on out here. Let me see if I switch back to... I'll call which chart it is. I was showing it just towards the very end. Here, probably this chart here. Let me see, where's the euro US dollar. Tom and I looked at this on Wednesday, just on Christmas Eve out there. Let me see if this is the chart where I put that. No, yeah, it is. How about that? Okay, good. All right. Hey, how's that for a memory? After a weekend of well, it hasn't even been. The weekend's just about to come upon us. Now, if you're watching us on Tiger TV, I'm going to share with you, what each of us want to do is we want to become pattern recognition experts. Now, there's all different kinds of patterns out there that you can pay attention to. You've got the expansions of swing points. You've got A to B equals CD patterns. You've got price that moves higher or lower, does it with less relative strength or weakness. You've got Chapman wave counts. You've got your TAS signal boxes. A lot of great tools out here that one can use. Now, inside of the euro US dollar, and this is a weekly chart, by the way, that we're taking a look at. And what I've identified for you, for watching us on Tiger TV, I've got yellow arrows pointing up or down. Now, and I can't tell you why the euro actually has this pattern. It's just of significance. And the significance is as we come into the beginning of the year, sometime, this is a weekly chart that we're looking at, what the euro typically will do is make a significant swing point-ish area, high or low out here. And here's somewhere my cursor's at. I'm taking you back to January 2007. Doesn't always happen like the first week. It's in that first few weeks out here is when the euro tends to make a top or a bottom of significance. So there is the 2007 area. Now, is there any other kind of pattern that was associated with it back in January 2007? No. So this here is some other kind of unique pattern. And I could float ideas out there, but I couldn't prove anything. Let's just pay attention to the pattern. Now, here back in the January 2008 timeframe, this happens to be the week ended, looks like January 21st, 2008. That put in a significant swing point-ish, what I'm going to call kind of a hidden or invisible swing point, because it doesn't really have to be a swing point, but it put in a significant low during that week out there, and the euro moved higher for quite a period of time. It actually went ahead and made a eventual top back in July of 2008. So, lasted for 6 months. If you come come take a look at the time period of December 29, 2008, so January of 2009. That's this other arrow here to the downside. And price just simply in the euro went back, made its way back to a logical area, an area of support down here. So there's another. So now you've got 3 years in a row. If we take a look at the January 2010, this is the week at January 11, 2010, when it began. From that high there inside of the euro, 1.458, it goes ahead and actually expands beyond the swing points back here from the 2008 time frame, makes a low in June of 2010. So now we've got 4. We're batting 4 for 4 on Steve O's. Hey, for some reason, and look, folks, we go back as far as you want. Before 2007. What you're going to see, just because I've got this on my screen, what you're going to see is you're going to see the same pattern. I remember going back for a long time. I don't remember, 20, 25 years, something like that. No, it couldn't be. It wasn't around for 25 years. But I remember going back for a long period of time, and I was only able to find 1 or 2 instances when it just simply failed out here. If we take a look at the time period here in January 2011, the euro makes some type of significant low out here. That lasts all the way into the May 9th, May 2nd level for the euro. If I take a look at this one here, this is in 2012. So the week of January 16, 2012, the euro did bounce higher, but only bounced higher for a couple of weeks, and then it moved lower. So now I'd consider this to be, let's change that arrow. Let's change that one to a red, just in case this happens to remain on my screen out here. So I'm going to say in 2012, did it work? Did it form a significant low? But when it failed, kind of failed miserably, went down to the lows in July of 2012 out here. As I'm walking you through this, where these other swing point highs and lows are being made, it seems like that July-ish time frame, is also just the reverse. But my focus right now is really on, hey, what happens typically right around the January time frame? Well, if you go back into January of 2013, made a high of some significance here. That high only really lasts. We didn't see the euro actually move out of those highs, really kind of consolidated lower. But when it did begin to move out of that was back in the July timeframe. So I'd have to say that the January timeframe and the July timeframe are just important markers inside of the euro for reasons that I just simply do not know. So if we take a look at what's going on inside the euro right now, here's what we know. The euro right now, it's moving lower. It's trading out at 1.21778. Everybody is bearish on the euro. Of course, everybody's bearish on the euro. I don't know why. Well, I think that the reason is because they believe that Mario Draghi is going to become the Ben Bernanke of Europe. And the reality is nothing could be further from the truth. He doesn't even have that kind of power out there. Not only that, he's an absolute liar. When I say liar, he's I don't use that word lightly. He's just because he'll come out on the stump. He'll say he's going to do one thing, and he consistently, not like it occasionally, he consistently doesn't do it. Now, look, most people aren't going to go take a look at the ECB's balance sheet to see that in the last 2 years and during that entire time period where he's been saying, hey, he's got these weapons of printing destruction, that he's going to do it, that nobody's going out there and paying, not I can't say nobody, but very few people are going out there to realize that the balance sheet has been reduced, hasn't grown. He's got his work cut out for him just to simply get his balance sheet back to where it was a couple of years ago. But needless to say, let's just focus in on the pattern out here. And that pattern says that what we're also seeing is we're seeing the euro move lower. From the low here, from the week that began, this is what's interesting to me, and I'll wrap it up here right now. The low that came in during that week that began, September 29, 2014, out at $1.25 out there. We've seen the market move lower, and it's doing it with less relative weakness out here. That says to me that the euro is going to form some type of significant bottom, or could form some type of significant bottom sometime during the next 3 weeks out there. You just want to pay attention to some other pattern trade setup, an A to B equals CD down, a butterfly pattern, whatever it might be out there. But it's not in the cards here as we speak just yet. That's the euro U.S. dollar. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report, that's 14 months, for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. You got the Dow's up 65 points out here. You've got the S&P is up 9, Composites up 25, Russell 2000 up 6, trading out at 12.13. The IBB shares, Biotech, is in the lead dollar-wise to the upside. Let's go take a look at it. It's trading out at 304.91. Now, there we go. I've got the IBB up here. That's the daily chart. So if we take a look at just simply, this thing had moved lower, quite a bit lower. Back here with some volume on December the 23rd. And if we take a look at retracements, now that low is running into some pretty significant support out here. For example, I'll just run over here and type that in on the chart. What we're going to find out is it was running into some pretty significant support here. The lines you're looking at on my screen here, these are the horizontal levels of support out here that were formed a long time ago inside of the IBB. The daily is in blue. 290.36 was the number. 286 was the level of support from a weekly standpoint. You can see that there's significant resistance as well up at the 316 level. That would be a visit of the top out there. Now, if I go back to this view, I'm just going to give you the retracements here. I didn't want to really mess with that chart. Just simply from the most recent high down to low, you can see that the IBB is above the 0.382 retracement level. So she's likely to head back to 308.79 as its next level. Where price should head to. That's the IBB. If we take a look at, let's see here, we got Boeing is to the downside. Then we'll go take a look at a couple of gold stocks just simply to round out the show here today. If we take a look at Boeing, we've got Boeing trading off 71 cents at 130.53 out here. Boeing has made a retracement from high to low out here of the 0.786 level. So 132.53 is a potential level of resistance inside of Boeing. If she gets above that, it'll likely go back and head up to the highs out here. Now, there's no high volume high or anything along those lines inside of Boeing, so we'll want to pay attention to this. No reversal signal of any significance, of any consequence as we speak right now. Again, we're going to have a low volume trading session today. Things being pushed around. You got gold is up now $20 out here. We covered that during the first portion of the show to show you the resistance areas. If we take a look at the mining equities, so let's take a look at Rand Gold. Rand Gold is up today. That's going to be on light volume. It's 76,000 shares right now. It's trading into a swing that had 1.1 million shares out here. Really, as you take a look at it, this is not the ideal situation for gold to be bouncing on light volume. I recognize it's a holiday out there. Look, we'll just pay attention to natural areas of resistance, but you'd actually prefer to see it have gone the other way here this morning. That is if you are long-term bullish gold, the miners, and so forth. If we take a look at Gold Corp out here, Gold Corp, this is important for us to pay attention to. Let's take a look at this. The real key level inside of Gold Corp is going to be getting above the 2142 area. That has been a very significant level of resistance. It's got a long way to go before it gets up there. And the reason why it's so important to take a look at this is because it's the number one holding inside of the GDX. Nonetheless, all the miners are looking mean and green here this morning. Here's my list of maybe about 35 or so different type of mining equities. They are all in the green. Percentage-wise, leader to the upside here is McEwen Mining. MUX is the ticker symbol. She's up about 11% out here. You've got Allied Nevada also to the upside. So in the case of McEwen Mining, right now today, first time in a long time, potentially, this would be a close above its market profile high out there. That top of the box is 108. You're trading at 110. Well, folks, it's been a great week. Be safe out there. A lot of partying going on, and I look forward to seeing you bright and early Monday morning. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.